Well, hello, everyone. Professor Valentine has heard you. He has heard the rumblings out there that everybody wants to see how to do the foundational 15. So he
Yep.
called me up this afternoon and said, "Hey, let's do one of these small plates on the foundational 15." So once I got out of the pool, I said, "Well, yeah, let's go ahead and do this, Professor." And so we're going to try and do this for you this afternoon. All right. So we got foundational 15. Now, Eric, you assigned this as homework, or what? How did you set it up?
Yeah. This is one of the five that are required, and some students decided to wait to the last moment for
I can't imagine.
no judgment. They're just waiting, and
Oh,
so
nope, nope.
we
All
have a few
right.
questions.
Well, all right. So let's kind of look at the structure here. I think because one of the challenges when I looked at the problem was it just seems like all text, and some of the previous problems we had were more like tables. And
Correct.
so trying to find the pieces of information was not trivial. So I think one of the good things about this problem is you're asking them to get in there and actually find the pieces that they need, and that's really helpful when you study. So that's I think that was a real plus. So
Yeah, I
one
try
of the
to
things you got out here, go ahead.
now, I was saying I was trying to I try to emphasize with them the the relationships between all the accounts and variables, and don't rely on structure and formulas so much. If you understand how everything works, the form and the structures will the formulas and the structures will take care of themselves. Yeah. So focus on the
Yeah.
relationship.
So you're after the relationships. I think that's true. I think that's also something all of the students need to know for the rest of their lives. Focus
Yes.
on your relationships. All right, no matter what age. Now, so let's get this sucker set up. And so the first thing they give us is January 1st. And so what are they trying to communicate there, Eric, by telling me it's January 1st?
This is our beginning of the year, our beginning of our fiscal.
Ah, so we've got beginning inventory there, right?
Yep. All this is our beginning inventories. Yep.
Okay, so if we go over to our little template that we've used before, we can see that I've dropped in the three beginning inventories. Okay,
Mhm.
so we've got that piece of information. So when you're going through this, you can kind of go through line by line because you'll get different information, but you're kind of putting this puzzle together, and that's why this idea of relationships is so important, because you have to kind of see how the puzzle pieces fit. And so that's what we're trying to do. So if we go back to the next thing, they tell us something about the company applies overhead on the basis of direct labor hours. Now, one of the things I do is I always tell these folks that's the phrase that pays. You
Yes.
got to find that one fast and know the basis for applying overhead because so much depends on it. And so
Yes.
it's a little weird here because they give you almost too much information, don't they, Eric?
They do. I'm surprised that they laid it out so much for us.
Because they've done what for us here?
They've given us our predetermined overhead rate.
Okay, so there's the predetermined overhead rate.
That's $16 per direct labor hour, and then
Ah, okay.
they give you the variables for the predetermined overhead rate formula, which
Yeah,
are 650 estimated manufacturing overhead divided by our 40,000 estimated cost driver, which is our direct labor hours. So now, as an instructor, I will give you one or the other. I'm not going to lay it all out for you.
well, let's make sure we've nailed that down. So this, you're saying that in the problem they gave you all three of those pieces, but
Yes.
you and I would probably just pick two of the three and say here's the information. And so
Correct.
always count on two of the three here. You
Yep.
got to know the relationship between all those pieces. So we're going to keep that theme of the day going, which is make sure you understand the relationships. Okay, so we got that piece done, hopefully. Then we got raw materials purchased on account of 510. Okay. What the heck? What do we do with that, Eric?
So when we have our raw materials template, you always start with what you start with. That was in our beginning inventory, raw materials.
Yep. So they gave us the 40.
Yep. And what you acquire or what you add in the period, that's the 510. Those are the purchases for raw materials. We added that in the period.
Okay. Okay. And then they tell us somewhere in there, let's go back and look real quick. They tell us that there's the 510, but they also tell us about the 480. That material was used in production.
Right.
Okay, fine. But then they give this other phrase here, this other phrase that I think is kind of interesting because, well, one, I'm not sure I'm that specific about it in class, but Eric, I know you are better at this than I am. So tell me what that phrase means.
So all of the raw materials were used as direct materials. So remember in the raw materials closet, when we buy raw materials, we put them in storage, we put them in the raw materials closet. That's all raw materials. That's direct materials, indirect materials as well. And so they're kind of making it simple for you by telling you that all of the raw materials are direct materials. So at the end, you don't have to take that calculation to pull it out. You don't have to pull out the indirect materials.
So at that point, you know that everything is going up in here.
Yep.
And so your Nike swoosh works just like that. Okay.
There we go.
And you didn't have to worry about any of that amount going over here into overhead.
Mm-hmm.
Okay. So at that point, we can probably get our ending inventory, right?
Well, yeah, for raw materials, of course, yes.
Yeah, for raw materials. So
it's a basic at this point it's a mildly interesting math problem. It's changed from an accounting problem to a mildly interesting math problem. Yeah, 4 equations.
That's right. Mildly interesting is right. Okay. So I get the 70,000 as always by taking those two things. And now I've got this. Well, these two things have to equal these two. And so since I knew the 480, I can also then figure out the 70. So the phrase that I tend to use a lot of is anytime I'm working in these closets, these inventory closets, if I have 3 of the 4 things, I can calculate the 4th. And so just like over here, if I have 2 of the 3, I've got the 3rd one. So and it doesn't matter. I mean, there's kind of an infinite number of ways we can give you the information. So when Eric says it's all about the relationship as opposed to a specific formula, this is the perfect example because you'll never know what the 3 of the 4 are going to be. So just know, okay, it's a mildly interesting math problem. I hope the professors had a good time writing that, but they're not fooling me with that piece of information. Okay, what's next on the list here? What else do we got?
Now we're in a work in process space, and so we have we have our direct materials that we just computed. Well, actually, they told us that, and we know that work in process is our total manufacturing cost. So that's our materials, labor, and overhead. So labor is given to us, and that's direct labor.
But it's kind of given to us in a strange way, isn't it?
It is. It is. They lumped all of our salaries and wages together.
So I've got payroll, if you will.
Mm-hmm.
Everybody's getting paid,
right.
And they split it up into these 3 pieces.
Yeah.
And so I've got the work in process piece, which is the direct labor.
Mm-hmm.
Then I've got indirect labor for the 150. And then I've got this SG&A over here for the rest. And so, remind me again, Eric, where does this indirect labor go?
So the indirect labor is your manufacturing overhead.
Oh, that's right. So it doesn't
Remember,
go, it's not going to be part of this 600 that goes here. It's going to get added over here to my actual manufacturing overhead, just like the
correct.
other labor gets added over here. So that, my friends, Eric has set you up for, and he's just given away one of the great final exam challenges that we put together. So I'm hoping everybody's watching this. Okay, do you feel like being really nice again, Eric, and tell them how they get their overhead?
Sure, sure. We have,
Okay, you're in a good mood.
yeah, it's Christmas.
Oh, okay, somewhere. All right, that's good. So how do I get that overhead amount, Eric?
So, okay, now they've given it to us. They just basically just handed it to us on a platter. So
I like that.
our calculation, the predetermined overhead rate is your estimated cost divided by your estimated driver.
Yep.
So that's the 650 divided by the 40,000 direct labor hours, and it
So
comes.
that gave us our 1625. Okay.
So you always to apply overhead. You always multiply that predetermined overhead rate by your actual consumption of the driver. So how
Okay. So
much
16 goes here, and I need the actual amount of the driver is what you're saying.
Yep, your actual activity.
I tend to say activity. You emphasize driver more. It doesn't matter. They're all the same thing. So,
yeah.
Okay. So now we have to go try and find the actual something. So in this case, what's the driver? What is the activity of interest?
Yeah, it's the direct labor hours.
Yeah, you remember when we were saying this is the phrase that pays. It's going to pay twice, or you'll have to pay twice.
Yes.
And so you need to know that I'm using direct labor hours here, but that's budgeted, and I'm using direct labor hours here, and that's actual.
Correct.
So we know this is 41,000 because they just give it to you, and it's down here. Hidden in there. Okay.
Yep.
So once you know that, what happens next, Derek?
We multiply our actual activity by our predetermined overhead rate.
Okay.
And that's going to give us.
That is not even a mildly interesting math problem. So that gives us 666,250. The more interesting part is the relationship, right? Where does that go?
That is the overhead that goes into work in process. You always have the work in process.
Okay, so this, the reminder here is this. Oops, sorry everyone. Got carried away with my pens. And so this is always applied.
Yes, always.
Always, always. So you've got to have this number, and then you got to take it and swoosh it up. All right. So that's the relationship you talked about between applied overhead and work in process. Again,
yes.
Focused on the relationship. Now, one of the things that I think students get kind of messed up with here is at this point, they have three different overheads they're looking at. And so let's go ahead and finish these out. So also in the problem, they give you information about additional overhead costs and additional selling and administrative costs. And those things total 650 and 607. Now, we've got three different kinds of overheads sitting out here. Okay. So we've got this one. Oh, it's unfortunate the way they put this together, isn't it, Eric? Because they put in, So they're basically set this thing up where the actual, wow, the actual and the budget are the same amount. Heavens, is that right, Eric?
Uh,
Sure looks like it.
yeah.
That's bad news for the home team. Ultimately, this one's actual. This was our original budget, and this was what was applied. So you're trying to make sure you have a difference between, or recognize that there is a difference between all three of those. It's not
Right.
going to really
Yeah.
affect us much in terms of working the problem, but just be aware that and don't get confused if there's three different kinds. Okay,
Yeah, we call that
so
an
what else do we
unfortunate
know, Eric?
incident. We
Yeah,
call,
that's an unforced error.
we,
Unforced error.
yeah.
All
Yeah.
right,
So that
go ahead.
we have our beginning working process, and again we have all of our additions now: materials, labor, and applied overhead. So that's what's acquired in that account during the period.
Okay.
I also don't know what was transferred out. In Part G, they took
Yeah,
us
they give us that 1,680,000, right?
exactly. So, like I said, we know 3 of the 4 equations now, or 3 of the 4 variables now. We can find the 4th. We can find our ending inventory now.
Cool. So 71,500.
Mm-hmm.
Now we need one more relationship, don't we? Where does this 1,680,000 go?
That is our cost of that is our cost of goods manufactured.
Okay, so that's the COGM.
Yep.
And where does it go?
It goes to our finished goods calculation.
All right, so I get that, and ultimately I'm going to be able to do my ending inventory just like we did the other ones. So these two things have to equal these two things. And so
Yep.
since this now is the remaining X variable, as you said, I can solve for that, and off I go. Okay.
So that's our cost of
You
goods.
good with that?
The 1,000,000,
Okay.
1,690,000. That's our cost of goods sold. Yes.
Now, do you describe that as being unadjusted or adjusted?
Yes, that is our unadjusted cost of goods sold.
Okay. Because I noticed in the text they do talk about that as the unadjusted amount, and
Mm-hmm.
so I just wanted to make sure that students could see the difference. So this number they talk about as unadjusted, and when the adjustment's going to come from the difference between actual and applied overhead, and we'll talk about that in just a minute. But if you're just doing the income statement with that cost of goods sold right here, this 1,690,000, okay, it just drops in here as cost of goods sold, and off you go. Now, one other thing, Eric, I think you talk about a lot and point out, rightfully so, is that, remember, this number is applied, but it also includes a what? A giant estimate?
It is an estimate. It's our guess. Yes.
Okay, all right. So, and the reason we can call it that is because we're using this 1625, our original plan, to make this estimate, updating it for actual activity. And so because of that, this number down in here, this 1,690,000, is affected directly by that estimate.
Right.
So this cost of goods sold has to be an estimate as well.
Yes.
So at that point,
Because
we need to see how, go ahead.
No, I'm saying, remember, we did this estimate on January 1st. And so this is
Oh, yeah.
December 31st we're working with now.
Okay, so we're trying to adjust what we thought was going to happen and re-estimate our overhead based on getting some new actual information. So when Eric was talking about actual activity, He's updating that original estimate for the observation of what's actually the changes in the driver or the activity that we can observe during the year.
Yes.
And so we knew that our actual overhead was 650. We knew that our applied was that. And so we've got a difference of 16,250. And so we've got to adjust cost of goods sold for that 16,250. And so that 16,250 ultimately has a very specific name, right? And the terms that we use are over and under applied overhead. And that means relative to actual. Is it over applied or under applied? So what do we got going on here, Eric?
We are over applied. We apply.
Oh.
You know, sometimes students get caught up in those names, over or under. Just think, do we apply too much, or do we not apply?
Ah, okay. So this one is too much.
Mm-hmm. Right.
Okay. So if we've applied too much, what's the impact going to be there? How are we going to handle that?
Our costs are too high.
Okay. So you're telling me that this 1,690,000 that we had estimated over here is too high.
It is too high. Yes.
Okay. And so I've got to reduce it by this difference, right?
Yes, exactly. Because the applied overhead has to match the overhead bills, the overhead receipts.
Okay. So, yeah, you want your financial statements as best you can to reflect actual results. And so that's why we're making this adjustment. And so when you adjust cost of goods sold for that, this is a place where it can get really tricky because you have to think about, at least I do, the steps in here. So the first thing I do is take that amount and subtract it from cost of goods sold. Okay.
Yes.
So I'm adjusting cost of goods sold directly. And so that's taking my cost of goods sold down. And when that happens, what happens to gross margin, Eric?
Gross margin goes up.
Ah, okay. So it's going up. Remember that selling and administrative doesn't change. And so we wind up with a new net income that's greater than our unadjusted by the 16,250.
Right. Exactly.
And so that, everyone, is a Saturday afternoon view of the Foundational 15. Anything else you'd like to add, Eric?
Well, two things. Thing number one is actually probably just one thing. Do not make that adjustment in work in process in your cost of goods manufactured. I've had some students who wanted to make that adjustment to the cost of goods to the manufacturing overhead in the computation of cost of goods manufactured. Well, if you do
now, do you use T accounts here, don't you?
I have used T accounts. Yes.
Okay, so let's go ahead and look at those real quick.
Okay.
So you probably have a work in process. You got overhead, actual overhead.
Manufacturing overhead. Yep.
Okay. And what else you got? Cost of goods sold?
Sure, yeah.
Okay. So we're trying to deal with this over, no wait, we're over applied.
We are.
By 16,250.
Right.
Oh, what just happened? Boom. So I am over applied by 16,250. All right. So how's that going to affect me?
So we have applied 6,250 more in overhead than the bills were. So that's going to net to be a credit of 16,250. Okay.
So we had so in overhead, I've got this credit right now of 16,250.
Right. That's the 650.
Is that right?
50 and the 6,625. Yes, exactly.
Okay. All right. And right now in cost of goods sold, I have an amount that's equal to 1,690,000.
Correct. Yes.
So what you're saying is that I need to get rid of this because I need to zero out my overhead. Okay.
Yeah.
Because it's going to go. We've handled most of it going to work in process, but we wind up with this difference, and we've made the decision to close it out into cost of goods sold, right?
Correct. Yes. So in order to make
Okay.
that
So
manufacturing overhead, go ahead.
I think you froze up a little bit on me. Go ahead. There you are.
Okay. Yeah. So in order to make that manufacturing overhead zero out, we're going to have to credit that for 16,250. We're going to have to credit manufacturing overhead at 16,250. I'm
You're
sorry.
going to have to debit that because it was a credit. You're debiting that, and you're already thinking ahead. You're trying to credit that cost of goods sold number.
I am.
And so then that's why we talk about over here, you net these first. You net these first. And he's
Yes.
doing it outside of that work in process. So it's not in here. It's as it relates to the income statement. And at that point, he's got, he has reduced his cost of goods sold by that 16,250, gets the new number that gets put into that income statement, and off you go. So
You go.
does that tidy that up a little bit for you, Eric?
It does. It does.
Okay.
We're good.
All right. Well, I think that's it. And I hope you all enjoy studying. I know we're enjoying writing the exam. So for now, let the games begin. And I'll see you later. Eric, anything else?
See
All
ya.
right. He's
All right,
out.
bye.
Take care, everybody. Bye.
Bye.